We are wrapping up a wild week for the banking industry. It's not done, and is the worst of the crisis behind us? Not according to our next guest. We're joined by Bob Nardelli, founder of Accelerate LLC and former Home Depot and Chrysler CEO, and Yahoo Finance's executive editor, Brian Sozzi, hanging out with us as well. Bob, thank you so much for being here. It's great to have your perspective after all your years in business on what is going on right now. So you don't think we're at the end of the crisis? I mean, the way First Republic is trading today, it doesn't feel like it. Where are we in the process, and how do we figure out what happens next?
Yeah. Well, thanks, Julie and Brian, for having me on this morning. The reason I would say that is I know we heard Secretary of Treasury say that the banks are now solid and there'll be no additional issue when we heard from SVB. But that's the same office that said inflation was transitory. And so, I look at this with a little bit of a jaundiced eye. I had a number of companies involved in the SVB situation where there were large distributions that were going to be made that got frozen. Now, fortunately, those were released to the investors in that fund, not necessarily in the bank. And then we've seen First Republic, which you've been advertising or talking about. We heard about Credit Suisse also having financial problems now, and it just seems to be cascading. I lived through the 07, 8, and 9 that you've been talking about and Rick was talking about earlier. And the issue there is we were focused on just the financial meltdown. And as reported from my experience, many banks were forced to buy insolvent banks and pick up those assets. Some put tremendous strain on Bank of America, for example, on JP Morgan with Jamie Dimon and so forth. So I just think we have to be very, very careful here. What we're seeing is, as you would expect, depositors are very concerned about having their money frozen in some of these regional and community banks. So I'm not surprised that we're seeing this thing kind of cascade and waterfall down to some of the other banks. One could argue whether what took place to save SVB and some of these others was right or wrong, but I don't think from a consumer standpoint, a depositor standpoint, there was any choice, and we had to bring some confidence level to the overall banking system and the depositors out there, Julie.
Bob, as someone that managed through the prior crisis, do you view this current situation as a crisis?
Here's what I think is significantly different. When I was running Chrysler, we were somewhat singularly focused on the banking situation that started to melt down. It caused a tremendous amount of pressure on the auto industry, for example. I got a call at 9 o'clock one night and said, Bob, you cannot do any more lease arrangements. And that was 60% of my business, for example, in Canada. But we were singularly focused on the financial banking crisis. Today, Brian, what I think we're facing is the extent with which a CEO has to manage today is as broad and deep as I've ever seen it. I've been at this for 52 years now. And when you think about inflation, you think about supply chain, you think about the loss of labor, you think about massive resignation and so forth. So the breadth of constituents that a CEO and a company has to try and satisfy, again, is as broad and as deep as I've ever seen it. And when you try to satisfy everyone, you end up satisfying no one. So the banking situation just adds another level of complexity. Now, if you adhere to the black swan theory, you try to prevent or put in place remedial actions to prevent that. But what we're seeing today, I mean, who went to bed Thursday night thinking that their deposits were going to be frozen on Friday, right? So it is the certainty of uncertainty that we're having to deal with today in the business community. Now, on the bank situation itself, what concerns me is how did certain investors become aware to pull $42 billion out on Thursday? What was the whisper, or how did they pick up on that? How is it that the bank employees got paid and many of the entrepreneurs and the startup companies couldn't make payroll because their accounts were frozen? So there seemed to be some potential inequity there. I don't know. but it's just on the surface would raise some eyebrows, I think, Brian.
Bob, you mentioned going back to the last crisis, tightening lending standards. We're now seeing signs that might be playing out now. Are we at the, or just on the cusp of those conditions sending us into recession?
I think we are definitely on the cusp of that, potentially. We went through this period where there was plenty of investment dollars. And so they were spread across a number of startups, and you hope 1 out of 10 was big enough to cover the losses on the other 9, and you'd have a home run. I think that people are now looking at it with a much more jaundiced eye and making sure that the money they're putting out there today has a higher probability of success. So, and we know that some of the entrepreneurs and startup companies suffered dramatically during this period, and we're seeing it cascade down, as I said. And so I think there may be some dampening of the spirit of starting some of these companies or being able to provide additional funds. I mean, we all know people are going out now asking for additional funding in a Series A, B, or C, D round, and I think there may be some concern about that. Unfortunately, we may not see the same level of entrepreneurship and new innovations coming out as a result of this thing, Brian. And so it remains to be seen. You had 2 experts on earlier on your program talking about that, and I think I would support some of their comments. Yes.
And Bob, as someone who, and I remember very vividly reporting on the crisis as it was unfolding in 2008, 2009, as someone who has worked through that one, and now you're living through this one, I'm curious that, I'm sure you talk to other executives, other investors. Can you give us sort of we like to do vibe checks here on Yahoo Finance. What's the sort of concern level now versus then? Are you having people who are freaking out, for lack of a better word, now versus then?
Well, I would say just during that crisis, what's happening now is cash is king, liquidity is king. I was just on a call this morning with one of our companies and really drilling down to make sure that we've got cash preservation, that we're really looking at every dollar that's critical to maintain liquidity in our company during this pressure. There was already a lot of movement there as a result of inflation. What were we doing? How were we managing supply chain? How were we going to make sure that we had the right labor mix because of some of the situation that were going on? Labor rates were going up. We saw all of these issues that were having a compound effect on the ability to run a business and to run a business profitably. So you can imagine 7, 8, and 9, we were burning about $1 billion a month at Chrysler. And so we were having cash council meetings every morning, reviewing commitments, not reviewing what bills we had to pay, but let's make sure we're conserving cash relative to the commitments we're making to order supplies, et cetera, et cetera. And I see that now more and more. You can imagine some of the private equity funds that I work with that had money in the SVB bank were very, very nervous over the weekend until they got confirmation that there was going to be this funding. I don't want to use the word bailout, the funding that took place to be able to keep running that business, to make the distributions to the investors in that fund, not investors in the bank. And I think you're going to see a real swing now for more intensity on cash preservation and liquidity. We saw that in the market, right? We saw a shift from growth stocks to dividend stocks. As you reported earlier, Julie, about some of the tech things up, all the banks are under pressure from what I saw on your board when you were reviewing that just a few minutes ago. So I think there is going to be somewhat of a pullback. People are going to want to see the whites of the eyes before they start spending frivolously on things or taking maybe reducing the degree of risk that they're willing to take during this period of time.
Bob, good to get your perspective this morning. Thanks for joining us. Our thanks to Bob Nardelli and Saz for sitting in as well.